Well, thank you for joining us today. This is John Sluice with Entrust CPA. Today we're going into the second of a series here on the One Big Beautiful Bill Act, otherwise known as the OBBBA, or what I will say is OBB, new tax law. What we're talking about today is the tax-free nature now of tips in overtime. Now, as with everything, there are caveats, exceptions, or otherwise, right? It's not unlimited and it's not for everybody, but yes, you did hear me correct that income on tips in overtime is now tax-free for income, not other taxes, and up to thresholds. But this, in my opinion, is actually one of the biggest volume worth of impact for employers and employees. The largest amount of employees are going to feel this of any of the other benefits. The amount of administrative work that's going to have to go into kind of tracking this. It's already there, right? But businesses are going to have to be aware of it. I know we have already made some shifts off of this, and there are many businesses that are making shifts to take advantage of this. It is real, right? Your employees, or if you are an employee, and you get tips or overtime, you now have the ability to have some income that's tax-free. I don't know any better tax planning than to just avoid the tax in the first place, right? So take advantage of it if you can. Now, honestly, this is a selfish side of things for the IRS. They're not doing it because they want to. They're doing it because they also benefit from it, right? So if you think about these, tips and overtime. Overtime is something that businesses like to avoid, and tips are something like individuals like to avoid in the past. So by making it tax-free, it's now less incentivized to not have them. And note I said that it's income tax-free. You'll still pay Social Security, right? So what wins in this case? You as the taxpayer win because you're not paying income tax, but so does the Social Security trust as well, because it's in theory increasing the base that's going into the Social Security. So truly, if I look at this, it's actually kind of a win-win, right? You're getting some benefit for it, and so is the Social Security trust. So we're going to take advantage of it. It's there. Now, what are some details and caveats off of it? First, it's not for everybody. No, I'm not going to institute a new policy that your tax return is $100 and a tip amount for the difference. That's not going to qualify. The IRS has already come out with the occupations that customarily and regularly received tips before 2025. They've published it already, so don't get creative. You can't go back and create your industry into a tipped industry, right? It's out there. Food service, hospitality, entertainment, personal services, they're there. But if you historically got tipped in the past, this probably is going to qualify for you. And what is it? Well, it's the first $25,000 of qualified tips per year. Now, that's regardless of whether you're single or married. It's $25,000 that's what's tax-free for you. Now, it does phase out, right? So if you have a married filing jointly, it phases out at $300,000, or if you're single, it's $150,000. But generally speaking, if you're making that anyway, the phase out on the tips probably doesn't apply for you anyway. But for the majority of individuals that are going to be having the tipped side of things, this is going to be a real impact. That $25,000 tax-free is a good thing. And it has ripple effects too, right? Because the way that the income tax base works is it's now not taxable for state taxes. It's not taxable for ancillary taxes and things like that. And so it is kind of nice that it does have that ripple effect too, which helps overall. Now, that's for tips. The same applies for overtime as well. So if you get overtime, if you're hourly, you can now have up to $12,500 for individuals, so $25,000 for joint filers. That is tax-free for overtime. What the IRS is trying to do here is trying to disincentivize businesses that historically would have said, wait, maybe that middle manager who they really want to get around having to pay overtime, we're going to call it, now you're getting a salary. They're trying to get those businesses to start recognizing that really should be paying overtime and then pay those overtime. It's real, right? So $12,500 per person or $25,000 for two people, tax-free is a good win, and we're certainly going to take it. Now, what are some details related to it? Well, first off, the tax on overtime, the tax-free nature of it, is only on the overtime part, not the extra hour. So most get that time and a half for overtime. It's the half time that is the overtime. So again, usually it's based on 40 hours. So if you work that 41st hour and you get time and a half for that 41st hour, the hour is not tax-free. It's the half, that kicker, that extra above and beyond. That's what's tax-free here. Also note that that premium does not apply to holidays, weekends, night shift differentials, and sick time or otherwise. It's just purely on the overtime pay that you get. Like the tax-free nature of tips, the tax-free nature of the overtime does phase out. So the phase out starts at $150,000 for individual, $300,000 for married filing jointly, and it's fully phased out at $275,000 or $550,000. So there are some phase in and phase outs that you have to watch for and be aware of. So why does it matter? Well, for employees, it's going to lower your taxable income, potentially increase your take-home pay. You're going to get some benefits on service, hospitality, and hourly wage sectors. For employers, make sure that you have a system that for payroll that's going to track these and be able to do it. I've already seen some draft versions of the new W-2 that's going to be able to split this out and to show what it's going to be for the tips and overtime. But make sure that you're coding it properly so that come to the end of the year, and yes, that's this year, 2025, that this goes into place, that you're going to want to make sure that it's in place. Yes, you heard me correct. It goes back retroactively. So unlike some of the other ones that are more forward-looking, this particular provision of the bill goes backwards. So it starts on January 1, 2025 and goes forward. Now, one other caveat is unlike some of the other provisions like the decreased interest or the decreased rates on taxes that are now permanent, this is just temporary. So this is a period of 25, 26, 27, and 28. Is when this is. So it's just a temporary thing for the next couple years. But we're going to take it for certainly where we can. I want to remind you again, too, that this is just income tax. The tax-free nature does not apply for Social Security and Medicare. So be aware that that is going to be there. But you should still see a decrease in your taxes overall just because of the income tax nature of it. One other caveat that I want to hit here on the tipped side of things is it's on the voluntary side of tips, not the required. So if there's a required gratuity that's built in, maybe it's a shift rate, maybe it is a flat fee, or where I'm interpreting it, those tables that are the 8 or more have the required guarantee, that does not apply. Now, I still have to see the interpretations, but what they are very clear on is it has to be the voluntary portion of tips, not a required tipped. They're very clear on that. So you are going to see some further guidance come out on that nuanceness, especially as a business owner, that you should be aware of and be paying attention to. So if you have this and if you're not already tracking this or not already thinking of ways on how it's going to have to be implemented, if you're in these industries, you should be doing so now. The end of the year is coming soon, so talk to your payroll provider, talk to your accountant, make sure you have that tracking system in place. Really, it shouldn't change that much overall, but it is there. And so at least think through the process of what have you done to make sure that you've got things in line and ready for come year-end for year-end reporting for this. And if nothing else, you as a business owner or an individual should be saying, how can I take advantage of this? I know we've made changes in our business, and I talked to many other businesses that have made conscious choices to shift on how you're compensating or how you're being compensated to take advantage of some of these tax-free natures. It's real tax savings. Do it. I would suggest it. Well, thank you for joining us today as we talked about now the new tax-free nature of tips in overtime. It's perhaps one of the biggest benefits I feel that many are going to have. It's not gigantic overall in numbers, but I believe it's the most impactful for probably the most amount of individuals that are out there. Join us next time as we talk about the tax-free Social Security, otherwise known as the senior deduction.